my name is Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second consecutive indecisive spinning top on Friday. A third consecutive one if you don't count Thursday's bearish harami, but instead look at it as a indecisive spinning top. I sort of think this is an unusual situation here. You see, usually I look for indecisive patterns when, rightly, the market can't make up its mind because of the competing bullish and bearish pressures. In this case, I think it is indecisive because those pressures are absent. You see, we are in a fairly free area, lacking pressure between the overhead recent 50% Fibonacci line at 119 3/4, which ironically was Friday's high, and above that the flatlining long moving average, currently 120.01, whilst below we have the June 2018 high at 118.51 and the continuation trend line from the old December 2019 to May 2020 lower diamond uptrend line, currently at 118.43. It's like being in the eye of a hurricane, though I personally think that is a way over dramatization. So far today, not much. Small move lower and higher than the close, and looking like another indecisive spinning top right now. Cable, aka sterling against the US dollar. A second bearish black crow on Friday and a follow-on lower to the previous session's bearish engulfing pattern, as the market rejected further attempts to try up to take on the overhead lower time, currently at 140.27, for now at least. And that's of the hugely significant, if broken, June-September 2020 bullish shift pitchfork. This was not surprising, I suppose, as an earlier attempt failed to make it. Not because of just the lower tine on its own, no. It was because the lower tine had backup in the form of the coincident rising short medium moving average, currently at 40.19, and the previously highlighted congestion at 139.99. This had been too much for the market and prices dropped. Not too far, but enough to close for a second consecutive time below the medium moving average, currently 139.51. All is starting to support an idea I'd recently put forward of a possible very large Adam and Eve type double top formed over this year. Now, so far today, a reactionary move back up, looking like a bullish double, yet still capped overhead for now by that flatlining medium moving average. Euro sterling. A second bullish white soldier on Friday and a follow-on higher to the previous session's immediate countering bullish engulfing pattern. This overall reactionary move up was due to the market recently touching down onto the lower bear channel line of the recent bear channel, currently 85.23 to 86.13. This has now taken over from the earlier bearish roof stroke half diamond pattern I'd spoken about. After some thought, I decided to leave target X as a downside target for the roof stroke half diamond pattern in the 85.25 area. It's still valid. I've been in two minds as to whether the recent move down to 85.28, only 3 ticks away from target X, could be called as having been achieved. On balance, I've decided to leave it there as being close, but no banana, not just yet. So far today, an interesting reactionary move today. The market rejecting the nearby overhead upper bear channel line with its shadowing partners of the paralleling short medium moving average, currently 86.21, and the medium moving average, currently 86.19, by making what looks right now like a bearish opening black Mariposa and bearish dark cloud cover pattern. It'll be interesting to see where this takes us today. US dollar against the Indian rupee. I have a confession to make. I was troubled on Friday with the actions I described for last Wednesday and Thursday actually, of a large bearish black crow with a smaller bearish black crow within the main body of the action. It was nagging at the back of my mind, and it was only late on Friday afternoon that I realized what it was, because I was looking at something else actually not dissimilar. Whilst my description of last Thursday's action as, and I quote, a higher but still indecisive spinning top yesterday, as the market tried once more to crack the overhead 50% Fibonacci line of the February to April 2020 move at 74.26, but failed to do so, end of quote, was completely accurate. Failed to realize it was day 2 in a 2-day pattern known as a bullish homing pigeon pattern. I'm saying this now just to show that I am just human and I misread actions sometimes. In this particular case, bullish homing pigeons may be a misnomer. You see, traditionally they are seen as bearish patterns, but actually data indicate that tend to slightly bullish in outcome just under 6 out of 10 times. The question for Friday was, would it follow tradition or the data? The answer was data, just about, with a reactionary bullish white soldier that was not only still capped by the overhead limiting force of 74.40 level, but also by the 50% Fibonacci line of the February to April 2020 move at 74.26. It is at this point again, I'm sorry if I keep repeating myself, but I wish to remind you, dear viewers and listeners, that I mentioned 4 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as 74.40 area and still keep the bearish incentive. Please note, the 74.40 area is not, repeat, not a target. No, it is a limit to the move higher. If and only if the market wishes to still keep the bearish incentive. So it's not like you hadn't been warned in recent days. So far today, a lower start, but then an attack at the 50% Fibonacci line at 74.26, penetrated, but beaten back in this first real attempt this week. We nevertheless have the makings of another bullish pattern possibly today. US dollar against the Brazilian real. A reactionary bullish white soldier on Friday, but really it was an outside, possibly also seen as an outside day, possibly also seen as an indecisive spinning top as well. The market nevertheless made a new recent low, if only just. Overall, the market is still moving towards fulfilling the two previously mentioned bearish scenarios of a large bearish halfway hesitation and a more recent bear flag. We have target X in the 42.80 area. This is a provisional and preliminary target for the whole mid-April to date action being a bearish halfway hesitation pattern. Additionally, we also have a bear flag action since late May with a target X1 for such a pattern in the 475.5 area. Meanwhile, overhead, we've got a fairly big congestion area between 5 even and 511 even, with a nearby 50% Fibonacci line at the October 2019 to May 2020 move at 496.58, which the market tested on Friday. US dollar against the Mexican peso. A fifth bearish black crow on Friday, but really can be seen as an indecisive spinning top that barely made a new low for the week. It is still nevertheless a continuation lower to the recent bearish harami, though the market tested down to the support congestion at 1971.68 and was halted there. Overhead, we now have quite a bit of resistance. Highs of early May and early June in the 20 even area. Short medium moving average currently at 1998.33. The neckline of the February to March head and shoulders top currently at 1995.25. And the April to May base congestion zone between 1985 and 1995. With all these moves down, up and now down again in June, we're set to make a possible monthly key reversal here. So, only a few days left of June to run. If we close on Wednesday the 30th, either over 20, 22.70 or under 1994.70, then we'd be on. Anything in between would mean a lesser outside month. Right now we're just barely looking at a monthly key reversal down. So far today, a move higher, dipping but not testing the support congestion at 1971.68. We're into the small April to May base congestion zone, which is 1985 to 1995. And now looking at the neckline also overhead. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.